Hi, I'm Barry Page with Legacy Money, and in this video we're going to discuss the Federal Reserve and what you can do to take control of your money. And if you'll stay with me till the end of this video, you'll understand the detriment that the Federal Reserve does to our spending power and what you can do to protect your family and protect your wealth. My mission is simple, to help you protect your family and keep more of your money. I'm here to help level the playing field for families and those who seek the truth. There's always a new way to make money, but at the end of the day, it's your family's security and your legacy that matter. And I promise to help you protect what's really important to you. Legacy Money starts now. So what is the Federal Reserve intended to do? Well, according to the Federal Reserve's own website, the Fed was created by Congress to provide the nation with a safer, more flexible, and more stable monetary and financial system. How's that working out? Since the Fed was created in 1913, the value of our dollar has dropped dramatically. How dramatically? Well, if you'll take a look at this chart that I've drawn on the board here, in 1913, the Federal Reserve was created. Ironically, the same year the IRS, Internal Revenue System. Our dollar, the spending power, has reduced to now equivalent to about 4 cents. All the while, inflation has gone the opposite way, meaning our dollars are worth less. Our spending power has been decreased. Since the Federal Reserve was created in 1913, it has presided over countless crises, recessions, depressions, and bailouts. And just recently, as you well know, the Federal Reserve has injected trillions of dollars into the economy in response to the coronavirus pandemic. The stock markets have responded in like kind by rallying over the past few months in hopes of a strong recovery. Even Mad Money's Kramer says the market's blind. However, many economists are predicting a tipping point. When will it all come crashing down? Some experts are warning of a reckoning when the U.S. will have to finally pay for all of this relief effort. The Federal Reserve has nearly doubled its balance sheet just since last year. And some are estimating that central banks around the world have already spent up to 50% of their GDP on the coronavirus relief efforts. The Fed's balance sheet expands when it buys assets, and likewise it contracts when it sells those assets. Essentially, there is no limit to what the Fed can do when it comes to controlling their balance sheet. Unlike our ability to use dollar bills and buy assets, there are limits, and we have to live within this system. So here's some questions that should concern all of us. Now that the coronavirus has seemingly gone away in response to the riots and protests, what will happen to these businesses? What will happen to families that don't have jobs to return to because these businesses are destroyed? Could investors complicate the Fed's bond buying efforts? Are privately held assets over-leveraged, and are they vulnerable to stock market volatility? Will consumer confidence come back, and when? What will happen if some of these businesses that were destroyed are reluctant to reopen? These are all questions that we have to ask ourselves, and really at the end of the day, it comes down to being in control of our own finances. Fortunately, there is a way to avoid fractional reserve banking and the Federal Reserve. The real problem is dependency. You see, when we take handouts and bailouts, we become dependent on the system. And this is good for politicians. It guarantees them a job. They have security, unlike us who are dependent on this system. Who doesn't want free money? And that itself is the problem. At some point, we become addicted to the handouts, and that creates dependency, which should be what we're trying to avoid if we want freedom and liberty. The dependency becomes so strong that it becomes embedded in our belief systems. Normal, intelligent people abandon their productive efforts and stand in line for the government dole. It's hard to break this dependency, and unfortunately, it leads to an entitlement mentality. Families for generations have been entwined in this government scheme, this dependency that leads to financial slavery. Their continuous manipulation of our dollars and the money supply has convinced people that they are essential, that we can't live without them. The good news is people and our monetary exchange ability has been around since the beginning of time, well before the Fed was ever created. We have to turn away from government programs and handouts. We have to be reliant on ourselves. We have to be responsible for our own finances. Only then can we have true financial freedom. God gave us the ability to produce and earn a living. We should be grateful and have a mindset of service and responsibility. As good stewards of our money, we can enjoy freedom and independence from government plans. We can make our own decisions on our own schedules without having to depend on others. We can enjoy true financial freedom. When we can save in accounts that we own and control, we can take back control of our money and invest our money in assets that we choose on our schedule. Something as simple as saving a percentage of our income can become fun. We can avoid government programs and look forward to our independence. We can celebrate in our victories and our ability to just say no to big banks and big government programs. So how do you take control of your money? Well, the first thing is money has to reside somewhere. Of course, it's up to you where you want to store your money. You could store it in a coffee can, under your mattress, in a bank account, in a safe, in a vault, wherever you choose to store your money. But there are advantages and disadvantages to where you store your money. Maybe this account is with a financial institution. Maybe it's not. The important thing is that you have access to the capital on your terms. Now, I'm just going to maybe throw out a few things that you might want to look for when you're looking for one of these accounts. The first thing is safety. Is the money protected? If it's in a can and it's in your garage or it's under your mattress, obviously it could be stolen. But that doesn't mean it can't be stolen in an account with a financial institution or in an account where the rules are dictated by the government. So we have to be careful where it's stored, and safety should be at the top of that list. Liquidity is another very important option. Is your money liquid, or is it locked up for a period of time? If it is in an account for a period of time, obviously we want growth from that account. If we don't have liquidity, there's a trade-off between the growth. And how about options to get to the capital, maybe as collateral for financing options? That might be important. And we would want an account that offers some type of tax advantage. So depending on the account that it's in, the money could be taxable, it could be tax deferred, or possibly tax-free. And you just have to ask yourself, do you want to pay the taxes now or in the future? What about the account itself? Is it self-completing? What if you were saving a percentage of your money and you wanted access to it later on in the future, but something happened? You had a medical problem. Are you protected in that event that you were sick, or possibly you even died and passed away? What would happen to that account? How is it transferred to your family, to your business, to the next generation? So all of these are things that we have to consider when we look at a place to store our money. So we've talked about the Federal Reserve. We've talked about their role and how they control the money supply. We've also talked about how you can gain independence by breaking free from the fractional reserve lending system. When we have our money stored in a bank or when we borrow money from a financial institution, traditional banks or lending apparatus, then we become slaves to the system. We actually encourage the system because of something called fractional reserve lending. So we want to avoid this if possible, and we want to take control of our money. And depending on the account or where our money is stored, this is what gives us this control. This is what gives us the freedom. So if you'd like to learn about alternatives to government plans and bank rules, then contact me through any of the links at the bottom of this video. I want to thank you for joining me today. Be sure to subscribe to our YouTube channel, Legacy Money, and leave your questions and comments in the comment section below. I look forward to seeing you in the next video.